Thanks for joining me. Today we are kicking off 2026 by looking back at the final numbers from December 2025. And if you're wondering, Mark, did the market crash over Christmas? The answer is no, but it did freeze. Today we are doing a deep dive into the month-over-month changes. We aren't just looking at last year, we're looking at what changed from November to December and where things are trending. The headlines: inventory plummeted, but not for the reason you think. Days on market crept up as buyers took a break for the holidays, and interest rates, they gave us a little bit of New Year's gift. If you're a buyer who paused your search in November, the landscape looks different today. If you're a seller preparing for the spring market, pay attention, because the waiting game is officially over. We're breaking down the data for Northern Colorado as a whole, and then we'll hit Loveland, Fort Collins, Erie, Longmont, and the Carbon Valley. Let's get to work. Let's start with the big picture for Northern Colorado. Comparing November to December is always interesting because of the holiday effect, and this year was textbook. Number 1, inventories level, the big drop. From November to December, we saw active listings drop roughly 20% to 25% across the region. Now, don't panic. This wasn't a selling freeze. This was sellers deciding, I don't want people to walk through my house during Christmas dinner. They pulled their listings off the market. What this means for you: if you looked in December, it felt like there was nothing to buy. But watch January closely. Those withdrawn listings are about to come back as new listings. Next up, we have days on the market. As expected, the median days on the market ticked up. Month over month, we went from about 65 days in November to over 70 days in December. Buyers checked out early. They went traveling, they focused on family. The homes that sat on the market in December accumulated days, pushing that average up. The strategy: if a home has been sitting for 70, 80, or 90 days right now, that seller is likely tired. Mortgage rates. Here is the good news. Though December we saw rates stabilize and even dip slightly, hovering in the 6 to 6.2% range, compared to the volatility we saw in early autumn, boring is good. Stability brings buyers back to the table. We are seeing lenders get aggressive with 2-1 buy-down incentives to help lower that monthly payment even further. Next up, list price to sold price. This metric softened slightly month over month in November. We were seeing homes sell for about 98.5% of list price. In December, that dipped closer to 97.5 to 98%. Sellers who had to sell in December were willing to negotiate. The holiday discount was real. Let's get local. First up, Loveland. Loveland continues to be the value center of Northern Colorado, but it got quiet in December. Month over month, the median prices in Loveland were relatively flat, hovering in the $465,000 to the $470,000 range. Days on the market. This is a key stat. Loveland homes are now averaging over 75 days on the market. That is up nearly a week just from November. The vibe: inventory here is sitting. We have about 5 months of supply, which is technically a balanced market, but it feels very favorable to buyers right now. If you're looking for a deal, Loveland is where the sellers are most likely to negotiate. Next up, we have Fort Collins. Fort Collins remains the stubborn sibling. Prices: while Loveland softened, Fort Collins held its ground. Median prices stayed firm around $545,000, with almost zero change from November to December. Inventory. We actually saw a sharper drop in inventory here than in Loveland. Fort Collins sellers are confident. If they didn't get their price in November, they just took the house off the market for the holidays. List to sold. Homes here are still selling for close to 98 to 99% of price. The demand for University area and Old Town doesn't really take a holiday break. It's less competitive than summer, sure, but don't expect fire sale prices here. Moving down to Longmont. Longmont had a fascinating month. We saw a slight dip in median price from November, settling around 535,000, but the big story in Longmont is the condo/townhome market. We noticed inventory creeping up in attached dwellings while single-family homes remained tight. If you're looking for a townhome, you have more leverage in Longmont right now than you did in October. Next up is Erie. Erie is usually our high flyer, but it hit the brakes in December. Sales volume dropped significantly month over month. Why? Because Erie is heavily driven by new construction. Builders push hard for year-end closing in November and December, but resale activity slowed down. Price-wise, it remains the premium option, sitting in the mid 600s, but if you walk into a builder's office in Erie right now, ask about their January incentives. They need to fill the pipeline for quarter one, and they are generous right now. Next up, we have Berthoud. Berthoud is seeing inventory pile up slightly month over month. We saw active listings hold steady while sales price dropped. This creates a micro buyer's market. If you have beautiful new homes in Huron Lakes or the smaller subdivisions that are sitting finished and vacant, builders want them off the books. Go look in Berthoud if you want luxury features without the Fort Collins price tag. Let's check on Windsor. Windsor is consistent. Prices held steady month over month at roughly 520,000. However, Windsor has one of the highest days on market averages in the region right now, pushing nearly 90 days in some price bands. Why? Because Windsor has a lot of inventory in that 600 to 800,000 range that is just sitting. It's great product, but the buyer pool for that price point shrank in December due to rates. If you are a move-up buyer, Windsor has incredible options for you to browse without pressure. Finally, the Carbon Valley area, Firestone, Frederick, and Dacono. This area is usually the most sensitive to interest rate changes. From November to December, as rates stabilize, we actually saw showing activity pick up slightly in the Carbon Valley. Even though closings were down, this tells me that first-time home buyers who were priced out in October are starting to sniff around again. Prices here are the most attractive in the region. You can still find single-family homes in the mid-400s. If rates drop another quarter point in January, expect this area to heat up faster than anywhere else. I hope this month-over-month breakdown gave you some clarity on what is actually happening on the ground here in northern Colorado. We track these numbers every single day so you don't have to do the guessing. Don't forget to like and subscribe to keep up with the market. I'm Mark Powell. Thanks for watching.